Hi everyone and welcome to today's morning report on Friday the 12th of February with me, Richard Pay, market analyst at Handtech Markets. European stocks are on the bounce and that's sort of come as we've had suggestions that there are talks between the OPEC countries over potential production cuts going to be happening now. So that's given the oil price a bit of a boost, 3.5% higher at the moment. And the oil price tends to be a bit of a driver of the markets, doesn't it? Although you could argue in the last few days it hasn't necessarily been so much. The market's focusing more on banks. But still, the oil price has the ability to move these markets, and it's improved sentiment quite significantly. In the last few days, we've seen huge flows into safe haven trades, but that seems to be turning around a little bit. You can see this US Treasury, the 10-year yield, hitting a low yesterday at 153, rebounded already to 168 and above yesterday's high. So is this a bit of a turning point? You can see a massive acceleration lower, big oversold position, and you'll be interested to see sort of asset prices such as gold lower. The yen is also just slightly weaker now. So possibly a bit of a turnaround in near-term sentiment. How long this will last for, it remains to be seen. I think the oil price is a driver near-term. We'll see how far this recovery in oil can go and how far it can drag equity markets higher as well. But certainly there seems to be a bit of a near-term correction going on in those safe haven trades and a near-term rally in riskier assets. So this is the dollar. You can see it's still been under pressure. No real sign of a recovery yet on the dollar, but we'll wait and see how that euro trade goes, and I'll talk you through that in a bit as well. So, what is driving the markets today? Well, we've got the economic announcements being Eurozone flash GDP. 10 o'clock. It's expected to come in at 0.3% again, so it's pretty much in line with the last couple of quarters. So it remains pretty much in line with that. And then I think the big driver this afternoon will be the retail sales. 0.1% down last time. Flat on the core data is the expectation this month. Now, that would actually show on the year-on-year data an improvement, because we see a minus 1.1% number for January last year dropping out of the calculations, so that year-on-year data would actually improve. So that would be considered to be a pretty reasonable return. You'd want to see retail sales starting to pick up. Now we're starting to getting a bit of wage growth through the states. You want to see retail sales starting to appreciate as well. So it'll be interesting to see the reaction that we get this afternoon. But it could be a driver of the dollar certainly today. But the market is still, as I said, focusing on this oil price. Now the chart today is the Aussie. Interesting that we've seen an improvement in risk appetite, but no real improvement in the commodity currencies. Now, I showed you the Kiwi yesterday, which is holding on to its uptrend, but the Aussie dollar has broken its uptrend, its recovery uptrend from the January lows, and it sort of is now trading sideways. You can see these long-tailed candles and small bodies, which would suggest real uncertainty with the move. You've got momentum indicators which are fairly neutral, but also you're looking at sort of moving averages which are neutral as well. So the market is sort of unsure as to exactly what its next direction is. But I'll show you here the hourly chart, which is sort of fairly reasonable. I've sort of got this blue line here at 170 big figure. 170 big figure has been a pivot in the past. Certainly caught a couple of lows, high, couple of lows. And you would argue also yesterday it played a role in forming a low yesterday, although a very slight spike below it. But you'd still argue that 70 big figure is a key level, but also 70.50 as well was a resistance high, became supportive, and has sort of acted as that turnaround has happened. Now, what we're seeing at the moment is this sort of neutral stance on the outlook in the momentum indicators. We've got the hourly momentum, which is sort of buzzing between 30 and 70, and we're also seeing the stochastics and the MACD lines, which is sort of fairly neutrally configured as well. So the market needs to break out either below that support around sort of 170 figure. Obviously, yesterday we had the reaction low about 69.80, but the resistance coming in at 71.50 is sort of capping the upside. But as I said, these candles that we've had today have not really shown an improvement in risk sentiment, which is interesting, because at the moment I'd say that you could argue that with this RSI failing around the 60 point again on the hourly chart, on the daily chart, and also the MACD line sort of rolling over around neutral, is that sort of another sort of rally that's going to get sold into on the Aussie? These rallies tend to be sold into in the sort of trek lower, but this uptrend certainly has rolled over on the Aussie, and it'd be interesting to see if the bulls can hold up above this sort of 70-50 support, which is the old neckline of the base, and you've not really had a close below that level since that uptrend has been broken. So it is obviously a level that the market is looking at, and it'll be interesting to see if it holds. But at the moment, the market is fairly neutral, but needs a catalyst, and it'll be interesting to see which way that goes. But I wish you good luck in your trading on the Aussie, and I will speak to you later. Thank you.